Ladies and gentlemen, good day and welcome to the Q4 FY23 earnings conference call of Arihant Superstructures Limited. As a reminder, all participant lines will be in the listen-only mode. There will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star then 0 on your touchtone phone. I now hand the conference over to Mr. Anuj Sonpal from Valorem Advisors. Thank you, and over to you, Mr. Sonpal.
Thank you. Good evening, everyone, and a very warm welcome to you all. My name is Anuj Sonpal from Valorem Advisors. We represent the investor relations of Arihant Superstructures Limited. On behalf of the company, I would like to thank you all for participating in the company's earnings call for the fourth quarter and financial year ending 2023. Before we begin, let me mention a short cautionary statement. Some of the statements made in today's earnings call may be forward-looking in nature. Such forward-looking statements are subject to risks and uncertainties which could cause actual results to differ from those anticipated. Such statements are based on management's beliefs as well as assumptions made by and information currently available to management. Audiences are cautioned not to place any undue reliance on these forward-looking statements in making any investment decisions. The purpose of today's earnings call is purely to educate and bring awareness about the company's fundamental business and financial quarter under review. Let me now introduce you to the management participating with us in today's earnings call and hand it over to them for opening remarks. We firstly have with us Mr. Ashok Chharjar, Chairman and Managing Director, and Mr. Dheeraj Jopat, Chief Financial Officer. Without any further delay, I request Mr. Ashok Chharjar to give his opening remarks. Thank you, and over to you, sir.
Thank you, Anuj, and good evening, everybody, and welcome, everybody. Thank you for taking your time out to join the company's earnings conference call for the fourth quarter and the financial year ending 2023. Firstly, let me take you to the key business highlights, followed by the financial performances. On Q4 to Q4 basis, we could do up a top line of 66 crores versus 70 crores, and the total comprehensive income after the for the period has been 106 negative to when compared to 881 on the 31st March on the previous quarter 4 2022. Annually, still we have been able to do up reasonably same. It was 330 crore rupees of top line, which had an increase of 18%, rising to 390 crore rupees this year ending from the previous year. And the profit before exceptional items and the lands to be 48 last year versus to this year 52 crores, and the profit on after elimination and minority interest and controlling interest, the last year it was 41 crores and this year it is 31 crores. So for the fourth quarter, the company achieved in terms of sales bookings of 650 units, as there was a launch which was largely awaited for the project Arihant Aspire, which took time for approvals getting nodded off, and it took almost 13-14 months to get the approval for that one particular project, or else it would have come in the earlier quarters as it was envisaged. With this, there was a growth of 29% on quarter-to-quarter basis of the area sold. Vis-a-vis, when we talk about sales on annual basis, we are almost equal to or an inch less than the last financial year. During the same period, we did up an total 5.36 lakh square feet, which aggregated to 336 crores of sales in this quarter. And the collections have grew by 21% from previous quarter. The company launched a new tower Galinia in Arihant Aspire, which made the contribution of higher total sales of the year. FY23 total units, as we told, we sold 1,552 units versus 1,650 in the previous year. Square feet wise, it has been almost the same, and the collections, the collections for FY23 stands to be 483 crores, and the company has done a gross development of 1,005 crores to the project portfolio in this financial year. The revenue yet to be recognized from the sales to be done is to a tune of 680 crores. The financial year 2023, we entered into new markets of Titwala, which were just preparedness of launch, and the launch has happened up in this quarter of Q1 of this financial year. And on the outright basis, we also entered into asset-light model by entering into a JDA at a very hot premium spot, just abducting after the new tunnel which is being prepared for, which is the new tunnel road, which is passing from Mulund to Shilpata. It is a 7 acre of land. It is on an asset-light model. The plans are done and it is under approval. We would see and construction start of daylight in the Q2 of this financial year. 25 acres of more land was also purchased at Chowk in the Q3 at where we are about to design for revenue income, that is rentals and consistent income from hospitality, as well as also from plotted development and villa development constructions. The blended margins currently today has been 18%, which includes our older projects also. So friends, when you see margins, the larger contribution this quarter also, and are coming from the larger projects, that is Arihant Aspire and Arihant Alishan, which are projects undertaken in 2012, 13, 14, and 16. And due to that, due to the capitalization, the margins for these projects individually stands to be 10%, whereas the new projects try to contribute to an extent of 35%, which happened even in the past year at the holding company Arihant Superstructures Limited, where one project only, Arihant 4 Aneka, contributed to a tune of 35 crore rupees, so which was around 35%. So new projects always contributes larger, only due to the lag of the slowness of real estate in the past decade, and the projects had been stretched, due to which we find margins less today. But what we find tomorrow coming up is the MTHL link, which is happening to be the core center of this area, and the price acceptance in terms of increasing price of sale price from 5 to 10, 15% also will not be surprises. And if that happens up in this financial year, the margins in the old project also will get increased. The new other projects which are on the other hand are churning out these margins. And the acreages of land, as in terms of business development, what we envisaged at the start of the financial year, we was to double up the size of the portfolio of lands and constructions. It stood at the projects of 1.2 million square feet stood at 130 acres of land in start of this financial year. We could add up to from 130 to 165 acres in this financial year, and another odd 45-50 acres would be added up, which are ready to be done up in this quarter one. Some due diligences are pending, hence the agreements have not taken place. The funds for the required lands to buy outright are already in place, and with the company it has been already arranged. So for the fourth quarter, the revenue stood at 66 crores with an EBITDA of 11 crores and EBITDA margins at 16.4%, while profit after tax was 24 lakhs, as we saw it about. And whatever the future outlook, what we see is that the interest rates are already peaked out, and every new news where even a drop of an interest rate in home loans would be seen as a great positiveness in terms of sales and price rise of the product in the coming days. And we are ready for we have a ready inventory. We have inventory which can cater to these large sales, which is to a tune of almost 1.4 crore square feet to a tune of 7,700 crores of top line. This financial year, we see that the new launches would contribute to around launch of 2,500 flats of the project sizes with an estimated revenue of 1,000 crores, and the unsold inventory from the current ongoing happens to be at 1,600 flats not sold, another with an estimated of 1,000 crores. So coupled up, it would be on the platter would be 4,000 flats on sale with an estimated revenue of 2,000 crores. The company targets to achieve around 60% of the total inventory of these 4,100 flats and 2,000 crores. If a few of the approvals are in time, we would be able to see these numbers. And the board has recommended a final dividend of 50 paisa per equity, and dividend policy is in place for YOY in the coming years. As the funds are more, the promoters on their willingness have withdrawn the right to this dividend, which results in saving to the company for around 1.5 crores. I open up the floor for question and answers. Open to the audience.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on their touchtone telephone. If you wish to withdraw yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, you may enter star and 1 to ask a question. We will wait for a moment while the question queue assembles. The first question is from the line of Anupama Bhutra from Arihant Capital. Please go ahead.
Thank you so much. So I just wanted to understand the debt situation. Like going ahead, what are the plans for the company? And the other thing is, how do we look, if you can give some outlook on the revenue and margins as far as some medium term, like 3-4 years ahead. So where do we look ourselves?
So the debt as on today on 31st March stands out to be to an around of 324 crores with all the entities. The attributable debt forms out to be for ASL with its stakes in the subsidiary works out to be 238 crores. So the split of the 324 crores of debt is that 175 crores of debt is from unsecured loans from the promoters, which are almost like quasi equity and which stands in the books continuously. And the institutional debt forms out to be another 150 crores. Servicing of the debt has been in time, and the cash flows to service the debt has been very comfortable. And in spite of this debt, we have been able to manage the top lines to be 390 crores, where engineering and spend have been done to an extent of 250 crores. Can you repeat your with respect to the revenue in the coming years? Management and as a company with the projects on the board, we see that few of the things, if they fall in place, which did not happen in the last financial year 2022-23, if everything is in place, we could see up an CAGR of around 35-40% very comfortably in sales, and revenue can be relatively have an increment of 25%, and on the same proportion, the margins will also see an increment. As I told right now that the old projects, when they contribute largely, the margins are lesser due to the interest being capitalized to the cost of the land, and the new projects when it starts off. So there are good new projects on the platter, that is Arihant around 9 lakh square feet at Kalyan, which has saw a very good start and launch in the Q2 of this financial year. Arihant Ayan at Titwala is on the Q1 of this financial year. It is under the process of launch. There are few more phases which are going to launch. So more and more new projects would get launched, which will have higher margins, and blended with the lower margin of projects of the past years, which would phase out very soon. We see that the margins will be increasing on YOY basis, and same proportionately what we see the so it will depend upon who contributes more. So old projects versus new projects, which are seeing the first day of daylight, that would make a difference. So construction and everything, when we talk about, we don't see a dip in the margins, but how much would it increase, that would depend upon the behavior of the projects which are under construction. So it's a little difficult for me to comment on it, how much margins would increase, but I surely see that there is no dip in the margins.
Okay. That's helpful. Thank you so much.
Thank you. Participants, if you wish to ask any questions, please enter star and 1. The next question is from the line of Abhishek Ketan from Alpha Invesco. Please go ahead.
Hello. Hello. Am I audible?
Yes, you are. Please proceed.
Yeah. So my question was regarding Arihant Akarshan. So sir, the project has been completely shelved off, right, sir?
No.
Okay. Due to the
Halted, shelved off.
Sorry.
It is halted. It is not shelved off.
Okay. But sir, we have
today also at this hour we have all the permissions of construction in place. We have the environmental clearance from the environmental body SIA. We have the consent to establish from MPCB also. The story goes like that. We launched up the project in the month of April, and which could see upon 350 units of sale at the first 1.5 month, and wherein on sustenance on every month-on-month basis we were able to do around 30-35 flats every month. And with that, it was looked that we would touch up, and the Arihant Akarshan would contribute to around something less than 600 units of sales to the company in this financial year. The construction was also initiated and started off in the month of July after the RERA has come place, after the excavation has done. In the month of August, it happened that the Taloja Manufacturer Association, which is the Taloja Industrial Association in and around, felt that there would be an requirement of some development plan variance to be taken, and hence they filed up an objection in the NGT level, where all the government bodies are also the party. And when that happened out, in the month of first hearing was taken in the month of October, and that is when the Panvel Municipal Corporation, who had granted up the commencement certificate on humanitarian grounds, had asked us, wrote us to halt the construction as a good citizen, so that only after clearances, further clearances and further clarification from the much more higher authorities of environment from the state to the central, we would start the construction. And that is where we halted the construction. Good what we did was that we called up each and every customer of ours at that time within 7 days of we finding this letter to our office. And that has really given the credibility to the company to a very large extent. The 400 plus customers, none of them has panicked. Everybody, on the contrary, came and told that, wow, it's good that we are hearing it from your office itself rather than from the markets. And that is what we have been relying on Arihant. We trust there is a reliability, but in such a situation, what is the stand you would like to, we would like to take, has been asked by customers, and we told that such clearances sometimes take a longer period. You should either opt for switching it over to any ongoing project or take a refund back. So it was almost out of all the 400 cases, to a tune of 275 units, we have given the money back to the clients. There has been no huge and cry in terms of complaints, cases, RERAs, etc. Not a single thing has popped up and escalated up to disturb the, or to be answered rather than disturb. And it has brought up a lot of credibility to the company, saying that the other developers in the vicinity had not taken such type of measures and to appraise the clients, and relatively they have some huge voices being raised with those developers. And going forward, it looks like that the authorities would be able to conclude it within 3 to 6 months from now. So there are two scenarios. One scenario is that the project would see in continuity, and so the sales and numbers would again start off in the same and similar manner. The potential of the land cannot be diluted by the authorities in any way, as in constitutional rights also, and under the Property Acts, right? And the scenario two is that if the government wants to do a reservation of the requirement of land for these buffer zones and extra, then the only measure which a government can do is and would be directed is to acquire all the lands in and around, and which would mean that they have to pay up and 5x the price of the current ready reckoner price and the market price blended. We see that a minimum of 100 and above would be received by the company, and if that happens, anything between 100 to 200 crores, we see there would be a big cash flow for the investments of only 16 crores done in the land and 4 crores for the vis-a-vis the profitability, or the company is very much secured about its revenues from the land, either in the form of compensation or in the form of starting the project. So that is where we stand today.
Okay, sir. So to get this right, we bought the land of 16 crores, right? How much acres is it?
This is 10 acres.
10 acres. 10 acres. Okay. So 16 crores for land cost. How much for development?
Around 4 crores.
4 crores. And we had started some construction that included this 4 crores.
That was hardly we spent something. It was only excavation. So
okay.
Not much of it. Around 20-22 crores, maybe 1 crore here or there.
2022. Okay. 22 crores. So we will get this 100 crores. So maybe multiple payments or TDR, right? Okay.
No, this is straight compensation in form of cash.
Cash. Okay. In the press release, we mentioned partial TDR also.
Pardon?
In the press release, we mentioned partial TDR also.
It can be.
Okay.
It is the authority's decision would do. I don't think we have mentioned about TDR in the press release, but it can be. I hardly see about it, because either they have to acquire the land or they have to. TDR does not generally come into acquisition of land. It is only by way of compensation. Reservations, if it happens, then it is in the form of TDR.
Okay. Sir, and just another question on the same project is, so we had launched almost 600 units, and the phase 2 was another 2,000 units for the same project, right? 1,900, around that figure.
The project was split into 2 approvals, so 1,000 flats each, so total was 2,000 flats, and we started with the launch of 600 flats in the phase 1. So yes, 1,400 was yet to be rolled out to the market. So imagine this all would have been in the smooth run, and has this have not happened, our targets to sales would have been to the same tune of what we had in statement, that there would be a CAGR of 25-30% and a little more than that, depending upon the approvals. So 1,550 plus 600 would mean around 2,150 flats being sold, which nearly we almost reached out. So we are almost neared up to our statements on it.
Right.
It would have even contributed to the PAT margins, because within a year's time the revenue recognition would have started off, and it would have added on to the top lines and the bottom lines both.
So total revenue potential for phase 1, phase 2 both was around 900,000 crores. Akarshan?
Yeah, that would take a span of almost 4 years of cycle of the whole project. It will not couple up. It will not come up in 1 year, no?
Yeah. No, but
the cycle of the building was that. Yeah. Yes. 2,000 flats into 45 lakhs is something around 800, 900 crore of sale.
Okay, sir. Understood. So we are still confident that we might start the project, right? Because in the presentation we've still maintained it on the launch pipeline and
we as a cautious management have always felt that the disclosures and the governance has to be in the proper the priority, and hence boldly we have come out to the markets, investors, and the shareholders by giving an elaborated view on our project, which seeing a little stalemate, and this is what we have believed into in transparency, and rather than just not detailing it out. So we have detailed up the minor thing to the shareholders, investors, and the markets.
Understood, sir. So another question was, so we have given a sort of a guidance of 35% CAGR pre-sales, right? So earlier Q4 FY22, I remember our sales target was around 45-50% CAGR, and a revenue CAGR of also 45%. So why have we softened this guidance?
A was this large contribution which got stalled of Arihant Akarshan. B, the project at Shilpata, which would start off in the Q2 of this financial year. The almost 75% of the land was done up in terms of development agreement in the past April 2022, and the last piece of the frontage of the land happened up in March 23. So that is why that project also would be contributing now this year. So that is a large size of project with around 1,500 units and 12 lakh square feet.
Understood, sir. Understood. Thank you, sir. We'll get back in touch.
Thank you. Ladies and gentlemen, if you wish to ask any questions, please enter star and 1. The next question is from the line of Manav Kapasi, an individual investor. Please go ahead.
Yeah, thank you for the opportunity. Just wanted to ask you about the collections for the quarter.
I'm not getting you clear. Can you come again, please?
Can you tell me about the collections for the quarter?
Collections for the quarter. Collections for the quarter. Collections for this quarter is 108 crores.
Okay, and my second question was that based on the construction cost which was shown this quarter, but sales which was basically very high this quarter, but the sales were low. So does that mean that higher levels of sales for the coming quarters will be recognized, and also revenue from the sold area in your presentation yet to be recognized is close to 800 crores. So when will that be recognized?
Due respect to everybody, I would again like to mention, as in the previous Concall also, that there are various type of industries who behave in a different manner, and most of the manufacturing industries behave where the turnaround from the buying of the raw material to the finished goods going out of the factory and coming, the revenues collections coming, generally happens in 2, 3, 4, 5, 6 months of cycle. It is only this real estate where a building on an average at least takes up a total cycle of completion from raw material to the last square feet of part of the production happening around 4 years. So for the real estate companies, when the turnaround for a single turnover is 4 years, for it to be judged on quarter to quarter basis would not be so much accurate when company to company. But yes, on YOY, it can be compared, and we see that such all revenues would come up as the company still has the highest credibility. The total inventory is 7,700 crores to be sold on platter. The projects are all approved. New business development are taking place. So the operation side, business development side, the sales side, the performances or the ability to do has increased. So even if you see the individual entity level of profit making, in the press release as we have mentioned that it was 18.47 crores for ASL on individual level, 14.67 for Arihant Abode Limited, for 13.45 crore on Arihant Vatika Limited for this financial year, which would mean that around 46.70 crore rupees of top line versus 390 crore rupees of sale, which is something around 12% of the total margin. And in the last 4 years, when we see from FY20 to 23, the sales booking has increased from 265 crore to 773, which is at an annual run rate of 43% of CAGR on year-on-year basis. The net worth also from 146 to 245 in last 4 years from 20 to 23 means an average rate increase of 17% per annum on YOY basis. So we would like to do more better performances than this. The efforts are being taken. The efficiency is in the first radar. The efficiency, when we talk about today also, the company has been able to manage the cost of sales less than a 4% as it was in the last financial year, though there has been a lot of rise in advertisement materials, the salaries and etc. And the administration and marketing costs, we have still been able to put it up to 5%, which is the best efficient to handle up when projects of this mega size are taken place in terms of launches. So it will be better off this financial year. Looking forward for a blooming year this year.
Okay, that was quite comprehensive. And my last question would be, can you please shed some light about the project development and what is our plan going forward here?
The architects have been appointed, so very renowned architect like Christopher Bennington are on the board. The landscape architect, Mr. Kishore Pradhan, who are the top-notch people in the country, are there on the project. This would be a project which would define real estate and realty in a different fashion in the region of Mumbai, and also would give a great mileage and runway for Arihant and the Superstructures and the company in the coming years. So yes, we see around Q4 to be the month where the approvals would be in place, the design should be completed, and the project should start off in both in phase of sales as well as in fashion of construction also. And the project is named under the name of World Villas. The company is already enrolled up in digital company for positioning the project and no sales. So you would be seeing World Villas on many digital platforms where you, even if you inquire on the contact, there is no sales invitation, and the company talks about the project and its profiling. So this project, we would position it first and then we do the launches.
Okay, understood. Thank you so much and all the best.
Thank you.
Thank you.
Participants, if you wish to ask any questions, please enter star and 1. The next question is from the line of Surbhi Jain, individual investor. Please go ahead.
Hello. Good evening, sir. I just wanted to understand what is the reason for slowdown or flat growth in units sold for FY23?
The cancellations from the Arihant Akarshan was the one reason it has slowed down. The mega project launches got stretched out, so the launch figures of Arihant Aspire are split into Q4 of last year ending 23 and Q1 starting 24. Also, the projects like at Shilpata, Arihant Avanti, the Thatwala projects at Arihant Ayan, they could see daylight just at the last few days of the financial year. So all major events, it looks like, will happen up in this financial year of 23-24.
Okay, got it, sir. And sir, just one last question. What is the outlook on debt in FY24, and what will be the maximum level of debt you'll be comfortable with?
As always, we have told that when business development has to be taken up on a larger span, only the free cash flows from the projects are not sufficient enough to do up and business development to this scale from 100 to 200 acres, almost doubling it up, and which means that the funds have to be brought in. So we have raised funds through secured and institutional loans in this Q1 also, and from unsecured loans also. So the debt would increase up in this financial year 23-24, but vis-a-vis what we see is the size of the business is getting up to a very large size, and without a capital, the projects cannot be acquired. And if you find out that even after servicing the debt, there are still margin to an extent of 18% and plus, which would marginally increase on YOY basis. It's a good business to be done. So imagine 18% plus 18-20% of margin plus 12% of 12-13% of debt servicing. That means the company is doing a margin of almost 30%.
Understood. That was helpful, sir. Thank you and good luck.
Thank you.
A reminder to all the participants, if you wish to ask any questions, you may enter star followed by 1. As there are no further questions, I would now like to hand the conference over to management for closing comments. Sorry to interrupt here. We have one question from Gunpal Chaudhary, individual analyst. Please go ahead.
Yeah, sir. Very good afternoon. Am I audible?
Yeah, you are. Please welcome.
Sir, I want to understand value of sales is around 773.1 crores. Out of this, total revenue is 391.7 crores. So this total value for the financial year FY23. So I want to understand this 773.
Can you elaborate it? I still could not get the start of it.
No, on the investor presentation, 8 number slide, value of sales is 773.1 crores. So I want to understand this.
Okay, fine. See, the value of sales means the flat price of each flat being sold, or the square feet into the rate. So these, as explained earlier, that the cycle of a project is 4 years. So this would travel from, this sales would travel to revenue from work in progress in a span of 4 years of time. And what we see is sales which were from the previous years, which happens to be in the revenue model. So in real estate, as per ICA guidelines, percentage completion of method has to be adopted as revenue recognition for the income tax. And from the company side, we are the company who has the same balance sheet for Companies Act, that is ROC, as well as income tax. There is a provision where people opt for project completion in Companies Act and percentage completion in income tax, and hence some of the companies you may not be able to relate both the balance sheets, or what you see the company's balance sheet only, not the income tax balance sheet. At Arihant, you see almost the same mirror image of balance sheet in Companies Act as well as an income tax act. So percentage completion happens up on the percentage of work done on site, and the same percentage is extracted from the sales received to the revenues. And from the revenue, then the direct and indirect expenditures are reduced or deducted, which finally ends up into PBT and then tax and PAT.
Right. This is helpful. Thank you. That's all. And all the best, sir. Oh, thank you.
Thank you. Participants, if you wish to ask any questions, you may enter star and one now. The next question is from the line of Bhavin Savla from BK Corporation. Please go ahead.
Hi, sir.
Hi.
Hello. Sir, we just like to know the villa which we are targeting. What will be the size of that project?
Size of the project in terms of what? Square feet, acreages, value?
Sale.
Sales, something around 1,000 crores.
And the bottom line for the same?
We have yet not.
Approx.
We walk out with an margin of around 20% to the tag price, but it will be only after a time when the architect do the design and then the engineering does have a cost of the design, and then that is where the whole business model would be ready, and vis-a-vis according to that the prices of the sales would be derived.
Okay, so the figure that we are coming at 7,700 crores of total sales books, does this include this villa also?
No, it does not include.
It doesn't.
That will be added. That will be added on.
Okay. Oh, great to hear that. Thank you, sir.
Thank you. Final reminder to all
We are
the
doing up
participants.
one more liner to it. It is not only the villa. The first sort of design is to incorporate up and 200 rooms of hotel resort on 10 acres, Gymkhana, which would run on membership model for another 10 acres, and the residual land would be used for villa development. So that is where we are coming from, where we tell that on the book value, when these properties are done, the revenue generation or the rental models or what hospitality earns, you would find up an nice earnings of returns of 15% to the value invested in the company. So that will give sustainability, that will give stability, and it would be a blended business income. What we see in the Oberoi is that they have vesting as well as sales of flats. So that is the miniature same model which we are also walking through, and I think we should be able to see this daylight within 3 to 4 years from now. Over to you. Thank you.
Thank you. We have a question from the line of Concall Chaudhary, individual analyst. Please go ahead.
Sir, my question is, what will be the ideal EBITDA? It is usually 20% year on year. So going forward, what is your sense? Any comment on that?
EBITDA margins, again, for YOY basis, there is no reduction which we see for, but yes, with the new projects popping up and adding up the top lines and bottom lines, the EBITDA margins also will increase. Still, yes, few of the first years, that is 23-24 or something, would be averaged out because for the land acquisition which has been taken place and which is being taken place, the funds which have been raised attracts up financial charges. So either if they are capitalized, the P&L balance sheet will not hit, but yes, some of the admin expenses would be there. So we see and no dip into it.
Okay. And second, sir, any further floated project recently you have mentioned we are venturing into floated development also. So going forward, any similar project?
The business development department always is on, and so we never shut down to tell that the new projects are not being, there is no interest of new projects. But yes, this financial year, we would eye for now no new purchase of land, but any good opportunity which is asset light and small investment, will surely be able to grab it.
And sir, my last question is, we are hearing a lot of news regarding data centers coming up in MMR region. So any project or any interest in that space, data centers building?
No.
Okay, sir.
The company is not interested. Right.
Okay, sir. That's all. And thank you. All the best. Thank you.
Thank you. Final reminder to all the participants, if you wish to ask any questions, you may enter star and 1 at this time. As there are no further questions, I would now like to hand the conference over to management for closing comments.
Thank you everybody for joining the Q4 and the final results of the financial year ending 23. We look forward for new horizons in the year 23-24, and we will be better positioned from now when it comes to real estate in terms of brand and design and sales in the region of Ahmedabad. Looking forward. Thank you very much.
Thank you. On behalf of Arihant Superstructures Limited, that concludes this conference. Thank you for joining us, and you may now disconnect your lines.